Alright everyone, Cowboy Trades here, back with another update on Bitcoin and the stock market. So, yes, you read the title right, this is a fresh perspective. I've got some new and interesting charts that I do want to go through with you, but first of all, let's do a quick recap on the lower time frames and talk about what happened this week. Firstly, as always, if you do enjoy the content, please help me to get this video trending by smashing that like button, leave a comment down below, share the videos with your friends. YouTube loves these engagements and you'd be helping me get the channel out to new people. With all that said, let's dive right in. So, starting off on the weekly time frame, we had a pretty bullish week for Bitcoin, right? I mean, Bitcoin had a nice reversal to the upside, so did the S&P 500, the DXY has started to come down, and things are starting to look bullish for the markets as we close this week in the positive, right? Wrong. What I just said was basically paraphrasing market sentiment over on crypto Twitter and crypto YouTube, both of which tends to suffer from a trading disease known as recency bias. I'm not going to mention any names though. Looking at you. So what actually happened? Well, if we zoom in on the weekly, Bitcoin is trading down 2% after retesting its previous all-time high at 20,000 as resistance. It started to come down since then. Now, a lot of people got out of bed for this move, but all we did was make lower lows in terms of the candle body close. And if we look at the wick as well, we're making lower highs from 20,500. We're making lower highs from 23,000. We're making lower highs from 25,000. We're making lower highs from 32,000. Do I need to go on? You can see this trend. It is still clearly lower lows and lower highs. The S&P 500 is trading down 1.65% after rocketing into new cycle lows and setting new lows in terms of the candle body close. You might also be interested to know, if I do clear up one of these charts, that the SPX rally didn't even touch the short-term moving average on the daily EMA ribbons. I mean, come on, we didn't even have a successful reversion to the mean back into bearish territory. So yeah, don't believe his lies. The only way we're bullish is if we zoom out, clear things up, and head over to the inverse scale. At this point, you can actually see that we have formed a bottom and we have higher highs, higher lows, higher highs, higher lows, and higher highs. Let's turn on our EMA ribbons. As you can see, we're currently using them as support and we're trading above these. The only problem with all of this analysis is that it is on the inverse scale. So, just the same way that that chart looked bullish a second ago, this chart looks extremely bearish right now. And for the DXY, we're trading up 50 basis points for this week, setting higher lows from last week and also setting new cycle highs in terms of the candle body close above resistance. You can see our new weekly close is at 113.1, whereas we were suffering from previous resistance on the candle body closes at 112.8. Sentiment really switches fast. But yeah, I have no doubt that the DXY is going to continue its parabola up to around about 117.35. And there's also a strong argument to be made that the 120 to 121 level is going to be a magnet for price action. Now, this is going to be such a huge level. If we do come up to 121 and we start to break down, this might be the bullish turnaround that we've been waiting for in Bitcoin for a while. We will obviously need to keep our eyes on other things like stock market news, the general economy, health of the economy, GDP, real yields from the government debt, etc. I will keep you up to date on all of this, of course. Also, please remember that I never wanted to flip bullish on the DXY and I never wanted to flip bearish on Bitcoin. I'm a Bitcoin maxi after all, but what I want does not matter whatsoever. When I'm at my desk recording these videos, I leave my emotions at the door. As you can see over here, here is a post that I made 6 months ago highlighting exactly that. And as you can see, I've kept the same energy the entire way down. 50% down since I made this. So yeah, my point is that I may not be the most agreeable or the most liked crypto YouTuber. This is basically because I have no filter, meaning I'm not like these other crypto YouTubers. I'm not here to whisper sweet nothings into your ear and tell you what you want to hear. I'm here to tell you the cold, hard facts. I'm here to tell you what you need to hear, which will help you navigate these markets. At the end of the day, love or hate me, my track record speaks for itself. As we're on the topic of government debt, wrapping up this week with some quickfire points. Now, government debt in the form of the 10-year bond yields has pushed up to 4%, the highest it's been since 2008, obviously making new cycle highs. The US 2 years are also pushing up to 4.5%, the highest level since 2007. And finally, you can see if we take the 10 minus 2, it's breaking down into the negative. Now, until this turns around, there is no Fed pivot, and if this continues breaking down, making new cycle lows like it did down here on Friday on the daily time frame, this basically further suggests that we should be expecting lower stock and crypto prices. Also, the other day on YouTube, we extensively talked about how the sudden crash made the options unprofitable, causing that major whiplash down and back up that we saw last week. Now, if you haven't already and you want to learn more about why this whiplash happened, I suggest you come over and watch this video here, Bitcoin Whiplash Season. And of course, options becoming unprofitable on the day is not something that can be predicted with the VIX, which, by the way, calculates the volatility in the S&P 500 based on the 30-day cycle of volatility in options expirations. Now, I got a question about why the VIX didn't move much on that day. If we come over to the daily, you can really see it was unbothered by this complete whiplash that happened. And like I said, I thought this was a good question, so I thought I'd just quickly answer why for you. So yeah, in terms of my TA, nothing's changed. Higher time frames, I'm still eyeballing around this 16k region, and also, like I've said before, I do believe that these daily EMA ribbons are going to start kicking Bitcoin to the downside of this triangle pattern. You can already see we've been pushing to the downside of this floor quite a few times already. So let's now talk about these new charts for Bitcoin and the SPX. Now, if you're a veteran of this channel, you'll recognize this chart. It's an overlay of the 2008 recession. We've taken a bar graph all the way over here, and we've plotted this over the price action in the S&P 500 today. Now, when we look at this chart, bear in mind, we have retroactively fit the top. So as you can see here, the red and green cycle is obviously what's going on right now, and this kind of white, off-whitey hue color is basically what happened in 2008. Now, like I said, we've retroactively fit the tops in this. So what that basically means, and why we're basically interested in this fractal, is because of market psychology, market sentiment, and human emotion. Now, of course, with these moves in the market, it makes sense, as you can imagine, that people's emotions are going to replicate in the peaks and troughs. These may have been at different times of the year, which they were, because the peaks weren't at the exact same time in each cycle. But as you can imagine, looking at this overlay, market sentiment would have been switching from, at the all-time high, we would have been very euphoric. We would have started to break down into depression. We would have bounced back up into euphoria, broke back down into depression, euphoria, depression. And at some point, like I've been highlighting, I do think in the next couple of weeks, not particularly right now, maybe in the next month, that we do have a significant rally before coming down into new lows. Once again, as you can imagine, humans at these peaks are going to be feeling really good about their trades, and when we come down to the troughs, they're going to be feeling really bad about their portfolios. So this is why we're predominantly interested in market sentiment and human emotion when we're looking at this fractal. But what if we're interested in how key dates such as the quarterly GDP results or the October earnings season affect the market? This is exactly what I wanted to show you in this new S&P 500 chart. So what you can see with this is if we do go all the way back to the 2008 recession, technically the closest I can get to the 1st of January 2008 is round about the 31st of December 2007. So we've grabbed this not from the exact top, but we've grabbed this from basically January the 1st, and we've plotted this all the way down here over January the 3rd for this market cycle. Once again, as you can imagine, with the stock market, they don't trade every week. So if you look back at the week before that, it's the 27th of December. So we've basically fitted this as closely as we can from the 1st of January to the 1st of January in each of these cycles. And this is what we're left with. Now, once again, we're not looking at how human emotions and market sentiment dictates these markets. That is definitely part of it when news comes out. As you can imagine, people respond with their emotions to new news. But what we're particularly focusing on this is how things like when the back-to-back negative GDP was confirmed and we started to break to the downside from there. And also with this, we're looking at how, things like the October earnings season, which maybe didn't come back as hot as expected this year. October earnings season was good, but like I've highlighted in my most recent news videos, there's also been a plethora of bearish news coming into October. Retail sales are down, meaning retail is willing to put less money into the markets. There's less liquidity in these markets, like we've been looking at with the Chicago Mercantile Exchange futures, talking about how liquidity is draining out of these markets. So what I really want to highlight in this chart is when we overlay approximately from the 1st of January to the 1st of January and we overlap these cycles, you can see that October was extremely bearish for the SPX, and it is predicting that we do rocket into new lows for the next few weeks before we do have that major bounce. Now, once again, as you can see, these charts are slightly offsetted. So I do also want to point out, if we do head over to our original 2008 SPX fractal chart, that it has called for the bottoms this week, and it has pretty accurately called for every top and every bottom so far. So I would definitely advise caution. I personally think we have a tiny bit further to go down before another big bounce, but I am putting it out there. I do think a major bounce is going to happen in the next couple of weeks. And of course, I'm not saying this is the bottom. I'm saying this is going to be a local bottom. We're going to bounce up. We're going to make lower highs. As you can see, the SPX, I mean, we've recently started falling from 6,300. If, for example, let's get rid of this. If I just take something as simple as a Fibonacci, we can look at this more in depth later. You can actually see this lines up beautifully. The 618 Fibonacci from the 2008 recession was perfectly backtraced. So it could be a possibility that we do come up to the 618 Fibonacci, up to 4,000. I do, however, think that we have new lows in place first. And this in terms of the new S&P 500 fractal, where we're looking at things date to date. So for example, when we're actually looking at this breakdown that took place, you know that this wasn't a random time of a year. This was on the same week. And then next week and the week after, we should be expecting more bearish continuation to the downside before a bounce. So yeah, just thought I'd let you know about this. I did find it quite interesting. I am expecting a little bit more of a pullback before, once again, we do have a bounce to lower highs. And finally, wrapping up today's video, still on the subject of fractals, I wanted to discuss the similarities between the final capitulation for Bitcoin in 2018 and why I believe we're about to experience the same thing right now. So let's talk about it. Now, there are multiple ways that you can look at these things. First of all, let's discount fixed volume profiles, visible range profiles, and let's purely focus on these two triangle patterns that are going on, and we'll talk about everything in depth as we go along. Now, as you can see here, I am definitely saying these market cycles look extremely different. I am absolutely no way saying that what happened in 2018 looks anything like what we're having right now. I've said this many times before, but what I will say is this descending triangle pattern is very similar to this descending triangle pattern. Maybe not in terms of scale, time frames, and the entire cycle, but these two patterns do look very similar. And what I do believe is that the final capitulation is in place. Now, I personally, unlike a lot of people, don't particularly think that 75% or 74.5% was enough to break down for the bears to be happy. I think the economy is in shambles and we should really be looking at something a little bit more than that. So number one, I do see this kind of support box. I've highlighted this in orange because this is just the color I like to use. But if we highlight this as green per se, so you can identify this as support, we had many wicks down to this range before obviously coming to the apex of this triangle. Like you can really see, we crabbed for so long. Now, I've highlighted this myself, that we are basically in a crab market right now. If you don't know what a crab market is, a bull market, bulls push the price up. A bear market, bears push the price down. And in a crab market, you're more or less just at the will of the crabs. They're just sideways walking like crabs do. And as you can see from right here down at the wicks, sure, yes, we had these euphoric runs up to the upside, downside like we have been having over here. But if we look at things like realistically from this wick all the way down to here, it took 287 days of crabbing on this support for us to break down. Am I saying that we're going to take 280 something days to break down? Absolutely not. This is clearly a much smaller triangle. And if we actually look at the apex of this, it looks like it's going to be coming round about the end of October, which is when I've been predicting a pump for the stock, not necessarily the stock market, because if we look at the stock market went down, but the VIX went up, the volatility index for the S&P 500 went up, the tech stocks such as the Nasdaq went up, and as we know, Bitcoin's highly correlated to the Nasdaq. So while the SPX could do its own thing on this according to the VIX, we should be expecting further volatility at least until the end of the month or so. So with that said, really, this triangle pattern is as simple as that. It looks like we're coming to the end of it. Now, let's talk about the volume profiles. Let's take it back a second. So now we've talked about the triangle pattern. Let's talk about the volume, specifically in terms of the volume profiles. Now on the right side, I'm using the VPVR, meaning the volume profiles of the visible range. And as you can see, the ranges are highlighted over here. So from all the way down here, just before the capitulation, up until all the way at the top. And we're measuring where the most amount of volume was bought and traded. And it is right around here. And as you can imagine, if we do start losing these volume profiles, there's not going to be many bids until we start coming down to these volume profiles all the way down here, which I will highlight in just one second. But let's go over to the fixed volume profiles. Obviously, this is no longer in the visible range. This is in the immediate visible range. So what we're going to do is we're going to do something very, very similar. So as you can see, the lows down here are where the VPVR is calculated. So we don't want to pull this down too far. We want to calculate from just before we started to break down, or the support that we're sitting at, depending on how you want to call it. And we're extrapolating this all the way up to the top. So we're taking in the data from up here, and we're stopping just before the breakdown, or we're stopping just on the breakdown, really. And if we take this volume profile for the or if we take this fixed volume profile rather, you can see where is the point of control from on the volume profiles. Well, as you can imagine, like I've been saying, it's a crab market. We've been coming down to this level for months and months and months and months and months and months and months. It is absolutely no surprise that we've accumulated a ton of volume, or that we did accumulate a ton of volume down here in 2018. The same with what we're doing right now. So it doesn't particularly matter if I'm looking at the VPVR. For example, I'll pull this over on the fixed volume profiles, just to obviously make sure I'm looking at these in the exact same way for both of these. And as you can see, when we draw these the exact same way, what do you know? Point of control coming in right at the apex of this triangle. Now, if we do not hold this point of control, which I don't think we will, I think we're going to start landsliding, and this is what I've been predicting. I think we're going down to lower price targets when we do look at these VPVRs. Now, also, just a quick pointer on the EMA ribbons, you can see once these started to get really, really tight down here, so just at the apex of this triangle pattern, I'll clear it up a little bit. You can see as soon as the EMA ribbons got really, really, really tight, and they actually caught up with this crab market that was taking place for 280 days, we rocketed to new lows. So I'm not saying we're breaking down, particularly this week. We could break down at the end of October. We could break down. It could take a while, but once again, EMA ribbons are drastically heading down to the price action. And what I will say is potentially looking at the EMA ribbons coming down to the price action would be a good opportunity to short from a reversion to the mean if that does happen in the higher time frames. But you do have to remember, you know, we didn't have these threats of World War III. We weren't in a recession. All of this madness that's going on in the world was not happening in 2018. How do I know? I was here. I've been invested in Bitcoin since early 2017. My average buying price is below $7,000 even after this market. I've been here for a while. I've been buying since $700 approximately. So when I say I know what market sentiment was like back in 2017, 2018, I do. I was here. I was living through it. Now, whether I was a good trader at the time is a different story. I've mentioned this before. I've made mistakes in 2017, 2018. I wasn't the best trader back in the day. I am human. I'm not perfect. I had to learn things the hard way. They say that geniuses learn from the mistakes of other people. Smart people learn from their own mistakes, and idiots never learn. I'm not a genius. I've never claimed to be a genius. I'm not particularly saying I'm the smartest person in the world, but what I do is I follow the smart money and I learn from my mistakes. I made mistakes by following retail money back in 2018. And when I was in this cycle, the market sentiment right at the apex of this triangle, everyone was saying, oh, you know, we've been holding 6K for half a year, almost a whole year, 10 months we've been holding it, super strong support, we're never going to break down from here, there's too many bulls, there's too many institutional money, and boom, you got clarted back down to the downside. You got absolutely clarted. Retail got caught with their pants down. They were not expecting it. They were saying if you don't DCA now, you are never going to get the opportunity to buy into Bitcoin at these lower prices. What happened? They DCA'd on this dip, they DCA'd on this dip, they DCA'd on this dip, on this dip, on this dip, and of course, you know, they started panicking down here if I do remember correctly. And am I saying that if you're a new trader and if you're really, really bad at trading, that DCAing Bitcoin when it comes down to these macro lows is the worst thing to do? Absolutely not. People forget this because I'm bearish right now. I'm basically a permabull on Bitcoin in the higher time frames. Some people say, you know, I'm fudding and their price targets for Bitcoin are 100,000, 250,000. I think Bitcoin's going to millions of dollars. I think if you literally hold 0.1 Bitcoin, you're going to be able to buy yourself a fat house in the future. I am a massive Bitcoin fan. I think it's the best money that we've ever had in this entire world, but I would be lying to you if I told you that I don't think we have lower to go down. I'm very objective when I look at these. I am a huge long-term Bitcoin fan. I've been accumulating since 2017. I have a hardware wallet in which I've switched over from a few different hardware wallets, but the objective is that I've got a wallet that I haven't touched, sold, sent any Bitcoin from since 2017. Don't worry about me missing this market. Worry about getting the accurate DCAs in, because in my opinion, I think we're going to go down from this triangle pattern. I think it's going to get a lot worse from where we are right now. That's just my opinion. Like I said, you can look at my track record, you can do your own research, but this, in my opinion, is the most likely scenario. I do think that the most amount of volume traded, if we just simply get rid of all of this, I don't even need to draw this because I can eyeball this. I can tell you, looking at where we are right now, that was the wrong thing. If we go over to the fixed volume profiles, where is the most amount of volume traded? Where do you think? Well, the next area on the volume profiles is right here, around about 12,000. I don't think we're going that low. I think there's strong support around about 14, 16 or so. I don't think we're going down all the way to the point of control. That would be ridiculous in my opinion, but I think we're going down to lower price targets, my friends. Also, just to quickly add on for this, I forgot this in my initial recording, so I noticed this while I was editing that I needed to mention this. If we actually take, once again, grabbing the wrong thing over here, if we come over to the bar charts, if we grabbed what happened over in 2017, every time I do this on a log scale, it becomes super disorientated. So you can see right here, this is an exact grab of what happened in 2018. Now, if we pull this over, what I really want to highlight is, you know, I'm not saying or I'm not actively retroactively fitting this to the top. What I'm trying to do is I'm going to stretch this a little bit, so I want you to know, of course, which is why I've showed you how I've got this, that I have stretched this out a little bit. I'm not taking exact fit, I'm not taking the exact highs to highs, I'm not actually lining up to the peak. But what I wanted to say is, if you kind of stretch out this cycle a bit, what you can see is this final triangle pattern that literally happened in 2018. Once again, another show of this is right here. This was the triangle pattern. If we fix this in the lower time frames right now, we do have this same triangle pattern, and this is one more reason why I think when we do get to the apex of this triangle, we're going to be booted to the downside very, very quickly. So there we go. That's the video and my full thoughts on what's incoming for Bitcoin in the stock market. I hope you all enjoyed the content this week. Also, apologies, this video was supposed to be released yesterday. I've had an extremely busy week, but nonetheless, it was good to touch base with you now. Also, be sure to follow me over on Twitter at 618_cowboy. If you only follow me on YouTube, you're definitely missing out. I do post a lot of TA over on here when I am busy. I've been posting some SPX charts, some Bitcoin charts, and of course, some important news. And yeah, I mean, some of these SPX and Bitcoin charts I've been posting have aged very, very well. So make sure to come and follow me over on Twitter. Also, be sure to join the Discord. This is the easiest place to get in contact with me. I do also provide, you know, announcements, important news updates, Bitcoin TA updates. You know, if I do anything on my trades, I try and update it first over on Discord before I upload the YouTube video. The invite link is always in the descriptions of every single one of my videos, or alternatively, if you come over to my YouTube, you can find all of my socials on the About page. Also, geez, 7.6k subs. Thank you, Cowboys. 10k is incoming. But for now, my friends, that's all I've got for you. See you in the next update. The next profitable trade for Bitcoin is right around the corner. So make sure you stay tuned. Turn notifications on so you don't miss it. With all that said, Cowboy out. Peace.